Hi guys, welcome back to the channel. My name is Dave and today we're talking tech, specifically tech ETFs. Now the NASDAQ is up nearly 24% this past year. That's outstanding. But I've got four ETFs that actually are doing even better. I've been buying these for a while. I love them. I'm going to continue to pile into these. One even yields over 9%. Pretty outstanding. So let's talk tech. If that is what you're looking for, please stick around. So before we jump in and take a look at these tech ETFs, I think it's important to understand that my view right now is that cash, the US dollar, is not a great place to be storing your extra money, right? So I do keep extra cash on the sidelines at times and I sell puts against that position and I try to generate some extra income. And if those shares get put to me, so be it. You've heard me say this before, probably. Otherwise, like and subscribe. But outside of that, I'm kind of coming around to this theme, this idea right now of asset inflation in the United States here and getting out of the US dollar itself and into other assets. So buying real estate, pouring money into Bitcoin, maybe buying gold. I actually have bought gold recently. I'm late to the party. I bought it at 3,800 bucks an ounce and now it's at 4,000. So it's just been over the last few weeks and it's a very small portion of my portfolio. I'm still not a big gold guy. But yeah, gold, Bitcoin, and ETFs, right? So when it comes to ETFs and investing like this, and I start talking about buying tech ETFs and we look at the valuations right now, and you might think that's pretty rich. Is this really where you want to start putting money into the market? Well, what are your options right now? I'm going to continue to buy the market in general, but do you want to be in, you know, dividend type ETFs like SCHD, which is down about 4% over the last year? There are other ones in that same category that are up about 7, 8, 9%. So it's not like it's that whole area, but SCHD has been a real dog over the last year. Or you could buy into something like the NASDAQ 100, which continues to perform. And the companies in the NASDAQ 100 that are making all this money are going to continue to make all this money. They're becoming more and more efficient, right? And they're the beneficiaries of AI, for example, right? So they're reducing the number of employees they have while they continue to make tons of money, which is going to generate more money. And they're taking this money and they're reinvesting back into the company to make more money. So I don't see that changing. Yes, the valuations are a little bit rich, but I still like this area. And that's why I started investing in these years ago. And still to this day, I will continue to buy this area more heavily than anything else that I'm buying at the moment. So let's start with the NASDAQ 100 just to get our bearings straight. I'm going to use QQQM. So if you are a buy and hold investor or just want a dollar cost average into the NASDAQ 100, this is a good product. You add the M, you save just a little bit on your expense ratio over just buying QQQ. But either way, either one, great product, right? 100 stocks. And the NASDAQ 100 has performed really well. Last year up about 24%. For the last 5 years up over 100%. So the NASDAQ has been on a tear. It's been doing great. It doesn't yield a whole lot if you're somebody that's looking for yield, but great product. And I like to use the Qs for trading options. But aside from that, I don't own a whole lot of the NASDAQ 100 straight up. But this is a good one to compare these types of products to. So I wanted to start with that. So the four that I'm going to show you have actually all done better than QQQM. And the first one we're going to start with is probably this is my largest holding when it comes to ETFs in my portfolio. This is VGT, the Vanguard Information Technology Index Fund ETF shares. So very inexpensive to own. Expense ratio is 0.09%, $9 per $10,000 that you invest. Again, we're not looking for yield, we're looking for growth. You can see that 1 year, 28%, 5 years, up 137%. So this is going to be more concentrated in tech, but you don't get 100, you get about 315, I believe, holdings in this. So more broad, okay, when it comes to the holdings within VGT, 319. And you're going to see every single one of these, the NASDAQ contains about 9 to 10% of NVIDIA. VGT has 17% and 13% of Microsoft and 13% of Apple. So if you're not a believer in large tech, then this isn't where you really want to be. But those stocks have done incredibly well. Palantir's done incredibly well this year, and it's overvalued in my opinion. But I don't buy Palantir individually as a stock, but with it inside of an ETF, I'm fine owning it in moderation through an ETF product like this. So that's why I'm okay, and that's why I continue to buy VGT. So this is a routine buy for me. And I also pair these up. I think I've talked about that. I pair this up with things like those NEOS products, QQQI, which I still think is a pretty good option for people that want income. I've talked about my reasoning behind that. Other people talk about how they would never buy those. So I get it. You could be on either side of it. But what I do is I kind of have a handshake deal with myself. I buy some VGT, for example, and then I will go over and I will buy some QQQI. All right. So that's the way I approach it. But my largest holding, VGT, and it's been an outstanding performer in my portfolio. Next up on my list is QDVO, and this comes to us from Amplify. This is their growth and income ETF. It's a little bit more expensive. Expense ratio is 55 basis points. It does have a yield of over 9%. So if you are an income-oriented investor, you like those distributions on a monthly basis, this is the one for you. This is up around 15% over the last year, and it distributes 9%. So total returns 24, 25%, and we'll look at that at the end for all these products. But it's only been out a year, and I started buying it pretty much day one. I'm really attracted to the Amplify products, whether it's DIVO, IDVO, or this one, because it's how I've managed my own portfolio probably going back 10, 15 years. I buy individual stocks, especially back then. I bought more individual stocks and I sold calls against certain positions. That's how they manage this with their expertise in the back of it. So I like that idea and I like that approach. And you're seeing that play out in this particular ETF and the performance that it's had in its first year. So great product. As far as the holdings, it's got 58 that it shows there. Some of those will probably be options as well. So let's call it 50. And again, you're going to see NVIDIA right there at the top, Apple, Microsoft, a little bit more balanced than VGT right at the top though. So good fund and one that I've been buying hand over fist this first year. Really like this product to complement the other ones that I've got. And that's something that's really important too. You do not need to own all of these. It's silly to own all of these. There's going to be a ton of overlap between all of these. So pick your favorite, pick which one fits in your portfolio, and work with that. But QDVO, an excellent ETF, off to a strong start in year one. But before we go on to number 3, first a word from today's sponsor, which is Public, about one of their latest features, which is called direct indexing, where in a sense, you get to create your own little QDVO if you wish to. One of the newest features at public.com is direct indexing. While once a strategy for ultra wealthy investors, advances in technology and zero commission trading have made it more accessible to a broader range of investors. With only $1,000, you can unlock direct indexing at public.com. Direct indexing is an investment strategy where you directly purchase most or all of the individual stocks within a benchmark index, such as the S&P 500, instead of buying a traditional index fund or ETF. This ownership of individual securities gives investors a unique ability to customize their holdings by excluding certain companies. For example, maybe you're someone that wants to tilt their portfolio towards value, growth, or momentum stocks. You can do that with direct indexing. Or perhaps you have a strong belief in ESG practices. You can also do that with direct indexing. So how does this work with public.com? Well, you select the benchmark you want to track, like the S&P 500. Next, you directly buy the stocks of that index while you exclude the stocks that don't fit with your portfolio. Beyond the pure customization and actual stock ownership that direct indexing offers, it also gives you the ability to tax loss harvest. For me, this is the most exciting aspect because since we have direct ownership of the stocks, we can pick precisely which stocks to tax loss harvest to reduce our overall tax liability. To help investors, public.com also offers backtesting of your chosen portfolio to see how it would have held up in the past, along with tax-aware automation to help spot those tax loss harvesting opportunities. So head over to public.com for more information on direct indexing. Direct indexing, kind of a cool concept, and if you want to find out more about that, there's a link. I'll put it right now down below. Down in the description, you can check it out, direct link to Public. But I have started using Public, especially for some option trades, because they offer you rebates on option trades, where some of the more expensive, elaborate option trades that I've done in the past can be pretty expensive. I get rebates over there. So I've been using that myself, like that feature. Anyway, number 3 here is XLK. This is the Technology Select Spider ETF. I've talked about this one. It's got about 70 holdings. Inexpensive to own, 0.08%. Again, it's done a phenomenal job over last year, up over 25%, near 26%. And again, if you zoom out, you go to 5 years, 141%. So this tech sector ETF, this is where you've wanted to be over the last 5 years, obviously. It doesn't yield a whole lot, so don't look for it for income, but you does have a decent option chain. Nothing great, but it's okay. I've traded options against XLK as well. So VGT, XLK, VGT is going to be more broad-based. XLK is going to be more focused on around 70. It's going to roll some different products in and out of their fund. But overall, very solid fund. I've owned this for a long time. I've used it in some portfolio builds myself, and it will continue to sit in my portfolio. And the last one I have for you today is SMH, which is the VanEck Semiconductor ETF. So now we're talking about a specific sector. I get that, but this is a sector that I want exposure to. So I started buying this not too long ago. It's not like I've owned this for a long period of time. But I do own shares, and I've been selling puts again. It's pretty aggressively, honestly. So I could have lots of exposure if there's a significant pullback. But I really like the semiconductor sector right now. And you can see the performance has been outstanding. So again, 1 year, 35%. 5 years, 270%. So everybody needs semiconductors, and they're going to continue to buy. So if you believe our economy is going to continue to expand, they're going to be using these. So I want to be part of that. A little bit more expensive, 0.35% expense ratio. I know, you don't care. I do. You don't care, but I do. And holdings wise, it's the usual suspects, right? So you're still going to see NVIDIA in there, but now we're going to see Taiwan Semiconductor, Broadcom, AMD, which is up about 40% over the last month. We're getting a little boost from Intel finally because the government's involvement. So small, only 26 holdings within this fund, pretty focused. And it would be my smallest allocation out of these for sure. But if all those puts end up hitting, maybe not. We'll see what happens there. But those are the four that I've been adding this past year. And again, I think this is going to continue to be a place where my money's going to be flowing. And finally, let's look at past performance over last year for total return for all these, especially since QDVO distributes so much. So I think this is important to look at. Although it doesn't mean deadly because we want to know what's going to be happening in the future. I get it. But we still want to understand how these are performing versus our benchmark, which we're going to be seeing as QQQ at 24.5%. So comparable products in many ways, VGT up almost 29%, XLK up 26.7%, right there with QDVO. Again, new product. It's only been out a little over a year, but 26.74% with about 9% of that coming off in the form of distributions on a monthly basis. And then SMH, which is, I mean, you can see the decline that it had, right? You can see this period in time going back to the beginning of the year when we started talking about tariffs and the reaction to in that fund versus the others till now. So the thing that pops out on this chart to me is, yes, they all have had outstanding returns, but it's that volatility during that decline. And that's one of the reasons that I think QDVO is just kind of an outstanding product, right? This one's really interesting to me because if you look at the decline during that period in time for total return, it's quite impressive, right? That option premium that you're collecting that's getting distributed to you during that time, during that decline, because they're keeping that most likely during that period in time, and they're giving it to you, really offsets a lot of that decline. So really impressive from QDVO in its first year. So definitely a consideration for people that want less volatility and some of that money off the table on a routine basis. So let me know down below what you think about these four. Are you still an investor? Are you still a buyer at this point? Or are you, nah, I want to get away from this? Let me know. I'm curious myself. And if you've got one that you think is even better, let me know that as well. Like and subscribe if you like this type of content, and check out one of these videos next if you have extra time. I'd really appreciate it. Anyway, tell all your friends. Come, join us, and we'll see you next time. Have a great night.